morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week sharing some of our point of views on the markets. Let's start with the membership before we check the live markets. You can get access to the Elliott Wave Street membership on the membership tab. Here you will find our plans for the Forex, the stocks, or the full access. We are offering a special price for the first month, so you can trial the membership inside. You will get access to live market analysis. Daily, we publish the reports Monday through Friday, and you're going to get access to the education as well. Next week, we're going to have another lesson about momentum and indicators. And already there we have the Elliott Wave Crash course, we have the Volume Profile course, we have the Candlestick course, and of course, the MACD workshop, and we are going to have a live class the upcoming week. So a lot to learn, a lot to find inside your Elliott Wave Street membership. All right, so let's have a look at the euro. The euro has been moving up in this three-wave sequence. This is an A, this is a B, and then this one as a C. And we are looking for another leg down on the euro this week, back to the previous low, the 95.40 area. It seems that the market is getting ready for the sell-off. Here we have price rejecting, and also in this area, it's key to understand that when the market is moving in the corrective wave, we want to see the price making some failures to continue higher, because the invalidation for wave 2 is where the beginning of wave 1 started. That clearly is this previous high. So the plan is to have wave 1, wave 2 as the corrective wave. In this particular case, seems that is complete, and now we're looking for the breakdown to have a nice sell-off to the previous low. Of course, the trade was here near the highs, because when you are trading, you need to understand something extremely important, and is the fact that if you have this stop loss versus this stop loss, let's say, in terms of distance, and let's say that the market is moving in this direction. Right? So in the first case, you are making this money 1 to 1 here, 1 to 2 here, right? 1 to 3 here, 1 to 4, 1 to 5, 1 to 6, right? 1 to 7 in this distance. So you risk 1 and you make 7. On the other hand, on the other case, you are making here 1 to 1, let's say 1 to 2, a little bit less, right? So of course, having a small stop loss is key for the results, because the market is gonna make the target, is gonna make it to the target when we have a working trade. And of course, if you have a huge stop loss, then it's going to be hard to make some good money. And the only way to make money on the longer term is having big profits when the setup works, and small losses when the setup doesn't work. But what if you have a working setup, but you can't make enough money because you have a huge stop loss in terms of distance, right? So you can see how important it is to manage a small stop loss in terms of points, in terms of distance and everything, because then at the end you're going to make some good money. But of course, a lot of traders are afraid of using a small stop loss because the noise of the market can take the trade out, and because it's hard, and because it's difficult to find the precise entry point. But when you're using Elliott Wave, and when you're understanding these institutional cycles, and when you understand all the things we check inside the membership, and all this methodology that is not just Elliott Wave, is also price action, is also understanding how the big guy works, and other key things, you can start trading with a small stop loss in terms of points, and that's going to make a huge difference in your trading. Let's have a look at the S&P. On the S&P, this is the daily chart. As you may remember, we went short. Our bias was short here. When the price was going up, we started to work with bearish bias. So actually, thanks to the wave theory and other aspects, other technical tools, we were able to find the sell-off. And from there, the target has been the previous low. So we are extremely happy with this setup because finally, last week, price was able to hit the target. So wow, that was fantastic because the bias was from here all the way down. So this is just great. And now we have to be careful because we hit the target. And if everything goes well and the market is not going to crash, because we don't know that yet, we would like to have price bouncing here a little. This stopping action is going to be key. This wave 4 is going to be similar to this leg up because the price was falling. Eventually we have a big leg up, so that's the one that is missing here, and then another low. And if we have the rejection, that will be this wave 5 here on this analog analysis. Right there is where we can go long and we can start building something interesting. Of course, we need to add some other things to this analysis, and will be the fundamentals. For example, checking where the bond yields are when we are seeing this reversal, checking oil, checking the dollar index. So, and of course, the CPI report that is coming up next week. So if we have this setup, we are not going long just because the setup. We are going to add some things, of course, to confirm. But on the other hand, if the scenario is the opposite, actually we can have from here a big crash on the S&P. We can go back to the 3,000 or something. And of course, in the membership, we are going to work with the trading plans to anticipate the reversal or the continuation. For now, for these days, for this week, I'm seeing this bearish. I believe the S&P is likely to continue lower to test this area. It seems that we are in a corrective wave for 2 that is likely to be done on this area. I'm looking for the reversal today in order to have the sell-off and complete the wave 3. And then, of course, a couple of corrective waves before we have the sell-off. So my target now is a little bit more tricky because we are at the lows. We are at an area where anything can happen. But I'm looking for the 500, 450 area. I believe this is a key area to watch the S&P start the reversal process, and maybe back to this 700, 750 area, then a new low, and that could be it. If not, if this is not it, we could be in front of a big crash in markets. So we have to be extra careful. All right, traders, that's the plan. If you want to continue watching our trading plans, not only on the Euro and the S&P, we cover a lot of instruments inside the membership daily, Monday through Friday. So please join us inside the membership. You're going to find a lot of value for your trading, Elliott Wave, education, live market analysis, and more. So you can sign up right now. It's here on ElliottWaveStreet.com/membership. Start your trial and you will get immediate access to this fantastic Elliott Wave world of wave counts, videos, education, and more. So I'll see you at the other side. Take care. Bye-bye.